Welcome to PortfolioCasts, the podcast where we break down real investor portfolios.
In this episode, we're exploring Mohnish Pabrai from Pabrai Investments' portfolio, the key holdings, the concentration, and the thinking behind it.
Mohnish Pabrai is back in the spotlight, and his latest filings show he is doubling down on his signature low-risk, high-uncertainty bets. The portfolio value is sitting at $443.1 million right now. Mike, it is up 31.5% overall. That is an incredible run considering how concentrated he is.
It really is a masterclass in conviction, Sarah. Most managers diversify to hide, but Pabrai concentrates to win. He is currently holding just a handful of names. His top three positions alone make up more than 80% of the entire $443 million pie. When you look at his strategy, he is essentially betting the house on a few specific macro themes.
Let's talk about the biggest bet in the house. Warrior Met Coal Inc. makes up a staggering 34% of the total portfolio. That is $164 million in a single stock. He owns nearly 1.8 million shares. Mike, the stock is trading at $91.12, which is right near its 52-week high of $93. Are we seeing a valuation peak here?
It is a fascinating spot. The price-to-earnings ratio is sitting at a very high 134.6. That might scare off traditional value investors. However, Pabrai looks at the long-term cash flow and the structural demand for steelmaking coal. This position has already delivered a 43.2% gain for him. If you look at the news, anyone who bought Warrior Met Coal 5 years ago would be up over 346%. He is riding a massive winner here.
Even with that high PE ratio, he hasn't sold a single share recently. The activity shows 0% change in the position size. He is just sitting on it. Is the 0.36% dividend yield even relevant to him at this point?
Probably not. For Pabrai, that dividend is just a small bonus. He is interested in the terminal value of the business. Warrior Met Coal is a specialized producer. They provide highly sought-after metallurgical coal. The market is paying a premium for that right now. Even though it's near the top of its 52-week range, he clearly thinks there's more room to run. He is not trimming, which speaks volumes about his confidence.
His second largest holding is another coal play, Alpha Metallurgical Resources Inc. This one makes up 25.9% of the portfolio. Between this and Warrior Met Coal, more than half of his money is in the coal sector. He recently added 15.57% to this position. That is a huge move, Mike. He now holds 532 million shares worth over $113 million.
That is the conviction I was talking about. He didn't just hold, he aggressively added. Alpha Metallurgical is trading at $214.10. It is also bumping up against its 52-week high of $216. He is buying strength, not weakness. His overall gain on this position is already 30.5%. He sees a supply-demand imbalance in the metallurgical coal space that the rest of the market might be missing.
It feels risky to have 60% of your portfolio in two companies in the same industry. But then we look at his third holding, Transocean Limited. This is a complete pivot into offshore drilling. It represents 22.6% of his portfolio. He has 24.4 million shares worth about $103 million. This was a buy recently, and he is already up 35.3% on it.
Transocean is a classic Pabrai play. He often talks about the mightiest machines, and Transocean owns the most advanced deepwater drilling rigs in the world. The stock is currently at $4.22. It has been volatile, down 2.5% today. But look at the 52-week range. It has moved from $1.97 up to $4.56. He caught a significant part of that upward move.
The daily change of negative 2.5% on Transocean seems to be dragging the total portfolio performance today. The overall portfolio is only up 0.14% today. Does the volatility of a $4 stock worry you when it's 22% of the fund?
For most people, yes. For Mohnish Pabrai, no. He looks at the replacement cost of these rigs. Building a new deepwater rig costs nearly $1 billion. Transocean owns dozens of them. He is betting that as oil demand stays steady, the day rates for these rigs will skyrocket. He isn't looking at the daily fluctuations. He is looking at the fact that he is up 35% on a massive position.
It is interesting that his top three holdings are all in the energy and materials sectors. Warrior Met Coal, Alpha Metallurgical, and Transocean. That is over 82% of his $443 million. He is not just a value investor, he is a deep cycle investor. He is buying these unloved industrial giants and waiting for the world to realize their value.
Exactly. And he is doing it with incredible efficiency. His total portfolio gain of 31.5% proves the strategy is working. He is finding these asymmetric bets. If he is right about the coal and offshore drilling cycles, these gains could double. If he is wrong, he has bought them at prices where he feels the downside is protected by the physical assets the companies own.
I am struck by the sheer size of the Warrior Met Coal position. $164 million. That is a massive amount of trust in one management team. He is clearly comfortable with the current earnings per share of 0.67. He is looking past the current numbers toward a future where these companies are the only ones left standing in their respective fields.
He is playing a different game than Wall Street. While others are worried about quarterly earnings, he is looking at 5-year cycles. Adding 15% more to Alpha Metallurgical recently shows he thinks the cycle is actually accelerating. He is putting more capital to work even as the stocks hit new highs. It is a bold way to manage nearly $500 million.
We've spent the first half of the show looking at the big picture of Mohnish Pabrai's current strategy. Now, I want to dive into some of the specific movers in his portfolio. Let's talk about Valaris Limited. This is a massive chunk of his holdings, right?
Absolutely, Sarah. Valaris is currently a core holding for Pabrai. It makes up 15.4% of his total portfolio. That is a huge bet on offshore drilling. Currently, the position is worth about $55,050,000.
But he's been selling lately. The data shows he reduced this position by over 43% recently. Why would he trim such a significant amount if he's still holding over 1 million shares?
It's classic Pabrai. He often trims when he feels the uncertainty he likes has been replaced by certainty that the market has already priced in. Or he might just be rebalancing. Even after that 43% cut, it's still his second or third largest bet. The stock is trading around $51.63 right now.
Let's look at the fundamentals there. A price-to-earnings ratio of 9.2 seems quite low for a company with an earnings per share of $5.61. Does that fit his low-risk, high-uncertainty model?
It fits perfectly. Look at the 52-week range. It has swung between $27.15 all the way up to $61.70. That is a lot of volatility. But the financials look strong. Recent news suggests that while the stock has shown some weakness lately, the underlying balance sheet is healthy. Pabrai loves finding these companies that the market is currently hating or ignoring despite strong cash flows.
It's interesting to see the daily change was down 2.66%. Does that worry you?
Not for a long-term value investor like him. He's already up about 5.9% overall on this position. He's playing the long game with offshore energy. He believes the world has underinvested in oil services for a decade. Valaris is his vehicle to capture that recovery.
Speaking of offshore drilling, he also has a position in Noble Corporation. But this one looks like it's on the way out. He reduced this holding by over 86%. Mike, what's going on there?
Noble is now just a tiny slice of the pie. It only represents 2% of his total $443 million portfolio. He's down to about 239,000 shares. Those are worth roughly $6.9 million.
That is a drastic reduction. Why stay in it all with such a small amount?
He might be in the process of exiting entirely. Or perhaps he prefers the valuation of Valaris over Noble right now. Noble has a much higher price-to-earnings ratio at 20.9. Compare that to Valaris at 9.2. It's more than double the cost for every dollar of earnings.
But Noble offers a dividend, right? I see a yield of 6.70%. That's a pretty significant payout for shareholders.
It is a great yield. The stock is priced at $29.24 today. But Pabrai isn't typically a dividend chaser. He wants capital appreciation. He wants the 10 baggers. With an earnings per share of only $1.40, Noble might not offer the same explosive upside he sees elsewhere.
The 52-week range for Noble is $17.40 to $35.06. It's currently trading toward the higher end of that. Is it possible he's just taking profits while the stock is strong?
That's the most likely scenario. He's sitting on an overall gain of 3.4% with Noble. It's not a home run, but it's a positive return. He's moving the capital into higher conviction ideas. We've seen him do this before where he prunes the garden to let the biggest flowers grow.
Looking at the total portfolio, he's up 31.5% overall. That's an incredible performance compared to the broader markets. What is the biggest takeaway for our listeners today?
The takeaway is patience and concentration. He doesn't own 100 stocks. He owns a handful of high-conviction bets. He's willing to watch them swing wildly day to day. Today, the portfolio was only up 0.14%. It's a slow grind.
He really does follow that Buffett mantra of waiting for the fat pitch. He isn't swinging at everything.
Exactly. He waits for the market to misprice a business. Then he buys in bulk. When the price starts to reflect reality, he isn't afraid to trim and move on. Seeing him cut Noble so deeply tells me he's found something else he likes even better.
It's a fascinating look into the mind of a master. Even with the recent weakness in Valaris, he's staying the course with a $55 million stake. He clearly believes the energy cycle has more room to run.
He's betting on the picks and shovels of the energy world. Whether oil is $80 or $100, these companies provide the essential infrastructure. It's a smart, calculated risk.
Well, that brings us to the end of our deep dive into the Pabrai Investments portfolio. It's always a masterclass in discipline.
It really is. Thanks for having me to break down these numbers, Sarah. It's going to be a very interesting year for value investors.
I agree. We will certainly be keeping a close eye on those filings. Thank you all for tuning into this special analysis. We hope these insights help you navigate your own investment journey with a bit more clarity. I'm Sarah.
And I'm Mike. Thanks for listening.
We'll see you next time. Goodbye. Thanks for listening to PortfolioCasts.
This content is for educational purposes only and should not be considered financial advice.
Any figures, prices, or portfolio values discussed are approximate and used for illustrative purposes only.
Follow PortfolioCasts for more investor portfolio breakdowns.